Hello and happy Friday. Welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, for Friday, June the 14th, 2024. This is the show where we break down all of the important moves across financial markets, and we got to start this week with King Apple making meme stock like moves for a $3 trillion company. This thing is screaming to the upside. One of its largest kind of 2-day surges, big weekly gain, new all-time highs. I think it's now just wrestling all three of these companies now, Apple, Microsoft, Nvidia. They're all pretty much identically valued in terms of market capitalization, but Siri got a whole lot smarter, some AI catch up going on here with Apple, and perhaps some pull ahead iPhone upgrade cycles, all kinds of good stuff. We'll look at that chart a little bit later in this video. And this game of whack-a-mole where we get inflation data and the market knee-jerk either sells off or rallies on it. We've seen it time and time again. Last week was a decline. Really, you can look at interest rates as the key kind of seesaw here, but we got CPI coming in cooler. Market loved it. Rates plummeted, let's call it, and equities ripped. Then we had Powell out, which was kind of throwing some cold water on the timeline, mostly the timeline here for where the path that the Fed is going to take. It seems now like one rate cut is kind of where their head is at, and where the market is now starting to grapple with just one rate cut this year. But when you look out in time, I think towards the end of 2025 and early 2026, we kind of get to the same spot. It's just that higher for longer. So ultimately, Fed statement a little bit more hawkish. Treasury yields, though, rolling over, so net, the market, generally speaking, liking it. But it really is this tale again of large cap tech versus everything else. When you look at what moved this week in markets, if you were in technology, you loved this week of trading. If you were in anything else, you probably got left behind. So we got lots to talk about. Stick around. All right, we are back. What'd you think of the new intro? A little bit of a change up there. Head turning when you hear a different melody, kind of slowing things down a little bit, not as aggressive as our old intro, kind of classing things up. It's been a long time since we've changed that. And really all of the kind of design front end of Stock Market Weekly, making a little bit of refreshes here this past week. So yeah, overall good change. Let's move into the charts here. So TC 2000, that's what we're looking at. It's what we usually work with here. And I work with traders every day on this platform, really sort of customizing it, optimizing it, helping traders get more out of it. So if you are a user, check out our website, thetraderist.com, see if we have anything cool built for you. And if you don't see what you want on the website, reach out to us, let us know what you're looking for, and I might be able to build it for you. All right. So let's get into the numbers here. Right hand column on the top, you see a very mixed picture, and this is this tech versus everything else. I think that'll become more apparent as we look into some of the sectors here. But if we take a look here at the Dow was down about 0.5%, Nasdaq up 3.5%, and Russell 2000 was down over 1%. So that's quite the difference there, quite the spread. And if we look below here, notice we've got pretty much upmarket volatility up as well. So typically you see, equity prices up, vol down. That's the usual relationship, fairly inverse, but not always. This week, it's the not always camp. So we are getting higher volatility across the board here, not by a big glaring fashion, but clearly a slight rise here by, a 0.5 point or so. The VIX is still in very low territory at 12.5. Take a look here at the sectors, and this is probably the most glaring lopsided market that we've seen in quite some time. These are the 1-week returns, and technology was up 5.6%. Real estate was up 1.5%, so not too shabby there. Consumer discretionary was green, a little over a 0.25%. Everything else was red. So energy hit the hardest, financials hit, and industrials down 1 to 2% this week. But most things here in the red. Look at the 1 month returns also. You've got a very similar picture here where over the past month, you basically had to be hiding out in technology or overweight technology to really be participating in this market. Of course, there's, individual stocks that swim in their own lanes, but generally speaking, this is getting more and more apparent. If we take a look here at our smart trend filters across the board, it's really not a tremendous amount of change here. Basically, you're just seeing in the top left here, XLK accelerating to the upside. So you're just seeing stronger momentum and kind of this chase FOMO building here in technology, which could be a warning sign in itself, just how parabolic it's getting for some of those huge companies. But breadth is kind of slowing down, deteriorating, going sideways, and sleepy, just generally speaking here, looking at our smart trend across the sectors. Now, looking at market breadth a little more closely, if we look at 52-week highs and lows, look, we're kind of in this similar situation that we were last week, and this is really where we said, look, we don't want to overanalyze this down to the second and third and fourth decimal point. You are still seeing a very kind of quiet market here on the highs list and on the lows list. 52-week highs have dried up for sure. That is very clear, but we're not seeing the big spike in 52-week lows yet. So we're not seeing the ratio stretch to the other side. So right now we're kind of in this wait and see mode until we get more of a breakout or a more convincing signal one way or the other. I'm going to give the benefit of the doubt to the prior trend here, which is up. It just seems like we are going through some summertime sleepy trading where mega caps are just getting all of the attention. So we're going to continue to monitor this. And again, you can see when you look here on our right hand dials, this is showing you the percentages of stocks that were up this week. And the top is the S&P 500, the middle is the Nasdaq, the bottom is the Russell 2000. I mean, the Nasdaq, only 44% of stocks were up this week. The Nasdaq was up 3.5%, and this is the Nasdaq 100, so this is already concentrated. But again, it shows you how top weighted and top heavy this market is. S&P 500, if we go back to the beginning here, this was up almost 1.6%. And if we go down to our market breadth, 36% of stocks were up this week. So the index was up 1.6%, but only 36% of stocks actually participated in that. Another way to say that, 64% of stocks were negative this week in the S&P 500. So again, just kind of really driving that point home that it is narrowing out there in terms of that leadership. Now, we're going to take a pit stop here. Investors Business Daily, they are a sponsor of the show. So thank you to IBD. This is their top 10 of their IBD 50 list. We've got a link in the description of the show. You can get access to this list. It updates every day, keeps you in the lanes of the strongest stocks. Highly recommend it. It's a cheap subscription overall for pretty actionable and up-to-date content. So check out that link in the description of this show. Now let's move on to commodities here. We saw oil have a nice rebound this week, up 4.19%. Generally speaking, most commodities did. Oil, gold, silver, copper, ag, all were, up this week and pretty firmly in the green. The dollar index was also up. So you've got an up dollar and up commodities. The only real commodities that stood out to the downside here is natural gas and Bitcoin. Bitcoin was down 5.5%. I do want to talk about that a little bit later as that trade starts to get a little bit weaker in its momentum and trend signal, but generally speaking, a good week for commodities. If we take a look at Treasury yields, this was a good spot this week. This was what you want to see if you are bullish on this market, if you are bullish, more so on the growth side of things, and you're looking at interest rates coming down. Look at the 10-year yield now. We are moving to multi-month lows, nothing extreme. We're not at multi-year lows. We're not cycle lows at this point, but we're definitely rolling over here. And this is a improvement. This is a notable sort of call out this week, because if you recall, we were sort of grappling with this trend line, which was, kind of holding up this rising rate first half of the year, or first 5 months of the year. And now we're finally starting to thrust away from it and move back to the decline, making lower lows, lower highs on this daily time frame now. So that's good. I think you want to see more of it, particularly if you are in the more rate sensitive and growthy areas of this market. So let's get into the charts now. take a look at some price action here. We're going to kick it off here with the S&P 500. So weekly time frame, you can see now each bar represents 1 week worth of trading, and we are accelerating up here in the S&P 500. First thing I want to call out is Bollinger Bands. Let's throw these weekly Bollinger Bands, and we're actually outside of the upper rising 2 and 20. I guess 2 and 21 I have as the setting Bollinger Band on the weekly time frame. So that's notable, shows that we're fairly extended in the short term. Doesn't mean we have to sell off immediately. It's just showing again the strength and the speed at which we have now risen up to the rising Bollinger Band. So keep an eye on that. You might be a little bit late to the move, but we are consolidating now back on the daily chart. If we take a look here at the 3-day action, you can see that the S&P 500 is kind of coiled right in here now. Almost 3 days of back-to-back insides, but they're not quite back-to-back insides. But you can clearly see that with the gap up we saw on Wednesday, the S&P 500 is now taking its sweet time here, maybe digesting through time, which is some of the most bullish patterns that you see when a stock or index in this case does not correct in price, where it sells off and comes back down and makes a nice higher low. It just goes sideways. It just consolidates. And when it does that, oftentimes, and it turns into a continuation pattern, those can be the strongest trends that you're in. And right now, jury's still out, but I wouldn't want to bet against the S&P 500 right here. Even though it is extended, it is still, has lots of good technical structure to it. MACD is rising up. You've got this gap up. Could we come back down and fill this gap? Absolutely. And we would still be very, very healthy kind of, technical landscape here. So S&P looks good. It's grinding. It's summertime. The stocks are working. So let's continue to follow this trend. What gets me concerned here? What changes it? Well, I guess, if we really lost this gap and we started to fill this gap and roll over and hold lower, then I start to get more short-term neutral on this market. We would have to really break below 52.50 to start to get more, call it intermediate term concerned in my eyes, which, look, isn't that far away. It's a 3% move. It's not very far. In most markets, you could be there in a day. So let's not lose sight that things can turn south pretty quick. But until and if that happens, I don't consider that the high probability situation at this point. But if we started to lose 52.50, then I get a lot more defensive. So that's the S&P 500 looking good, closing at highs. Nasdaq 100, here we go. New highs, closing the week at highs. 479 here for the Qs. There was that gap up on Wednesday. The difference with the Qs was it was no sideways consolidation. It was continuation, and then it was continuation. So the Qs here continue to march up. If we throw those Bollinger Bands on the weekly chart here, this is pretty extended, right? This is pretty frothy. This is really stretching over this Bollinger Band here on the weekly time frame. Just go back and look at charts here. Doesn't happen all that often. It does happen in the strongest uptrends, so do keep that in mind. So it's not a short immediately. It's not a short signal by itself, but it just gives you context. It gives you context that the chase is on. If you're buying here, you're a little bit late to the move, and there's some FOMO and there's some momentum driving this trade. So for Qs, really similar situation. What takes the momentum out? Well, a gap fill, a hold below it, and breaking some actual support or prior structure. In this case, I would say, around 460 or so. If we start losing 460 in the Qs, then I become more short-term, maybe medium-term neutral in this market, right? Like that's kind of the way I would look at it. So again, if we throw percentages on that, it's about 3.8% away. So it's not that far, but that's kind of the upper level I would use at this point. So that's the Nasdaq, that's the S&P 500. Russell 2000, completely different. Looks completely different, right? It does not look like this would even be a US stock market, but it is. And if we zoom out here, where's it going? It's going nowhere, but it's comfortably in this longer range that we've had drawn on the chart, and our analysis and our outlook for the Russell 2000 was in this range for longer, right? Just as the Fed is higher for longer, we've been saying now for months, the Russell 2000 is range bound for longer. And I still don't see any reason why that should change. It probably coincides with the Fed, higher for longer. And when that starts to come to an end, you're probably going to get a breakout here in the Russell 2000, right? It's always not that clean and moves get front run, but that's, not too crazy or a stretch to say. And the Russell 2000 right now, still in no man's land. There's stocks that are working here. There's stocks that aren't. It's in the middle of the range. It's a little bit oversold here. I wouldn't be surprised if it bounced a bit, but I don't expect it going anywhere until some more consolidation in this overall range. So that's the Russell. It is the weakest right now. And let's move on to some other charts. I want to talk about, let's round out the interest rate. So IEF, it's a 10-year Treasury bond. You can see breaking kind of a higher high here. We looked at interest rates earlier in the video. This is the bond fund, the 10-year Treasury. So you can see a nice move up there. TLT, same thing, right? Actually starting to get some legs here, turning around, right? Making the turn and trying to turn back up here, which is nice to see. It's got some convincing action for the first time in quite some time. You're getting a slight series of higher lows get put into place here. Some higher highs get put into place. Volume starting to come in a bit on the up days. So let's see if that strength can continue here in the long bond, both certainly acting quite strong this week. I want to talk about Bitcoin. So if we move over to Bitcoin here, this is definitely getting a weaker here noticeably. And this is where, this consolidation now has been taking place for about 4 months or so, or I guess 3.5 months or so, since topping out originally around 71K. It's been chugging along sideways. Now, this is really going to depend on time frame. Longer term, this trend is absolutely up. And I think, I still believe there's a pretty good story and narrative to support Bitcoin prices over the next 12 months or so. But I'd say in the short term, the technical trading and the technical action here is definitely weaker and slightly more concerning. I think it opens up the possibility of a retest of these recent lows down around 60K even, or perhaps even the May lows. I think we could be in this consolidation a bit longer if it can't very quickly reverse around these levels. I want this back over 67 quick, or otherwise I am going to look to potentially, lower levels here and potentially a retest of this 60 or 50, high 50s area. So really depends on time frame there. We still have a position in our Galahad trading system, although it could flip. We could get a sell signal there, not to short it, but to flatten out our long position. But noticeably weaker, and we'll want to keep a close eye on this. But for now, it's trying to do the fight, and we'll see if those buyers step back in. So Bitcoin was one that I wanted to talk about. I guess we'll round out with the last three, the big three. The big three. So let's move on to Apple. I mean, look at these two candles here on Tuesday and Wednesday. So just to recap, because we talked about it briefly at the top of the show, but this was after their worldwide developers conference, and basically, they announced a bunch of things, but the most interesting, I think, or what the market was caring about was the ChatGPT collaboration or integration. And also just the fact that it looks like you're going to have to upgrade your iPhone if you want to get all of the new features that are supposedly coming around the corner on the next upgrade cycle. So I think the stock is getting ahead of that now, basically anticipating there might be a lot more folks out there upgrading. And, that's at least my fundamental take on the breakout. The technical take on this is, hey, this thing was already pretty strong. We talked about the fact that about a week ago or a few weeks ago, maybe not last week, we talked about how Apple was unusually strong for the Mag 7, and it was trading right at its all-time highs, needed a little catalyst. Well, you got your catalyst, you got a breakout here, weekly chart. I mean, look, Apple hasn't really gone anywhere. You could argue since 2022. I mean, this was, just a month ago, a few weeks ago, this was trading at the 2022 highs. So that's, call it a year and a half or so consolidation, year and 3/4 consolidation. And now it's starting to break up here. So this monthly chart looks pretty darn good. Chase obviously is in full motion right here. I don't have any signals or fresh buy signals here myself for Apple. Again, I own the Qs. The Qs have been pretty strong, and thanks to Apple now, thanks to Nvidia here, which continues to march higher in a very strong trend, gap and go and consolidate. It's grinding higher here, and as many people may want to fight this trend, it is working. The stock split successfully here, and we're now at $130. So, I'm sure retail is back to being all over this. And then don't forget about Microsoft, the silent grinder here, back up towards highs. Once again, Microsoft really hadn't gone anywhere in a handful of months, and so now it's back up at highs. These are the three stocks, frankly, that are driving a lot of this action. So they look good, they look strong. Keep an eye on this, right? Looking for a rollover in the SPY and the Qs. Pay more attention to these three stocks. That might actually get you your signal, your early signal, if you start to see more weakness or divergences start to creep up in those three names. So that is all I have for this week's video. Hopefully you enjoyed. Hopefully you found it helpful. Thanks as always for tuning in every Friday. We got links in the description of the show if you want more for TC2000, some of the trading systems we have. And don't forget our sponsor IBD also in the description of this video. So enjoy the weekend, and thanks for tuning in. We'll see you back here next Friday. Take care.